Hello traders and welcome to another video review. Today is Thursday, May 18th, 2023. Let's take a look what's going on the Forex economic calendar today. Employment change data were published overnight from Australia together with the annual budget release, this time from the New Zealand. During the London session, we are still waiting for the data from the European Union. ECB President Lagarde will give a speech at 11 o'clock. Then 15 minutes later, Bank of England MPC Treasury Committee hearings are starting. During the New York session, we got Philadelphia Fed Manufacturing Index, initial jobless claims, and existing home sales data scheduled for release at 2:30 and 4 p.m. Respectively. So there are some important data, both from the European market and from the US market, American market. So I think it will be okay to take a look at the Australian dollar first, and then maybe we'll take a look at some majors as well. So technical part starts with the Australian dollar to American dollar 4-hour chart analysis. This is the chart of the Australian dollar to the American dollar 4-hour chart, and there is straight on very important situation going on. We got the low at 6,639 broken with the new low 6,632 and confirmed with the 6,633. So this level here is the key level right now for the bulls. They need to defend it, otherwise all of this situation will be even more unfavor for them. So any breakout of this level would lead to the test of the important technical support seen at 6,576. So that's the technical support. Please pay attention to the situation of the local technical support. Any breakout, we are going lower. Momentum supports the bearish outlook. The momentum is weak. It's been rejected from the level of 50. After the second bounce, it didn't even come to the level of 50, and now it's pointing to the downside. So we can place a very short-term line on the momentum, and if you see, if there's a breakout below the blue line, we can even hit the extremely oversold market conditions, and that will be around this level here. The lows from the 28th of the April located at 6,576. So that's the situation with the Australian dollar. Let's take a look at the crude oil after the yesterday's data. As you can see here, we have a very nice bounce. Somewhere around the let's say 100 periods moving average. Okay, so right now we are consolidating just at the average with the positive and strong momentum still on the 4-hour time frame chart. We have the technical resistance. We have the technical resistance, which is very close to the recent local high. So let me just show you guys what do I mean. This is the technical resistance. It's been tested many times here, then it was clearly broken. We have the pin bar on the lows, and we got the bounce, and then again we've been rejected from this level, trading very close to the level of the technical resistance. You can see it right now here. 74 dollars per barrel of crude oil is the key technical resistance for the markets. I don't need emojis, but I would do like to have some kind of okay, I don't have the arrow. So anyway, this is the level you should pay attention on. Okay, okay, so that's the level. We have the short-term trend line as well. We got the short-term trend line as well to our disposal. Where's my trend line? There you go. This is my trend line. Come here. Okay, I need to move it a bit lower. There you go. So that's the trend line. I guess you are all familiar with it, look at this beautiful bounce from the lows of this trend line. So we are trading above this line. That's very good. That's always something for the bulls, because there is a bullish reversal here. There is a pin bar here just on the trend line. Now we have the breakout above the now this is the local support 71.78, and we are trading close to the moving average. Bulls need to break above thick line, above thick red line here. They need to break above this level, otherwise there is no continuation to the upside. This is very promising bar, candlestick even. This very strong pin bar is very promising for bulls, of course. Well, so far we've been rejected, but it looks good right now for the bulls. They need more momentum, they need to break above, and everything will be better for the bullish side of the market. Let's take a look at gold as well. If you're talking about the crude oil, let's take a look at the precious metals. I will show you some levels which are kind of important right now for the market of gold. One of them is 1976. It might be tested very, very soon. The other one is 1968. Yeah, this is the other level, and the last one is somewhere around 1949. Okay, those of course levels are obviously the technical support. Let me just change it quickly to the correct color. There you go. And why they are important? They are important because the gold is no longer trading above the moving average on the 4-hour time frame chart. It looks like it's reversed very, very strongly after reaching the all-time high of $2,080, and you can see it's being kind of a ride for the bears. Now there is this congestion area here, located between 1970 and 2011. This zone is very important for bulls because they might postpone the breakout to the downside if they keep trading, you know, in a horizontal way, using the horizontal trend, and then maybe they will have the chance for another spike to the upside. However, with that kind of a momentum, which is dropping lower and lower and lower, now it even reached the extremely oversold market conditions. There is no interest of supply to buy the gold for these prices. So after the local technical resistance 1995 is violated, we can expect this technical support will be tested very, very soon, and in a case of a breakout below, the bears will gain even more advantage over the bulls and will push the market even lower towards, of course, 1949. Okay, so the outlook is bearish, but please notice the fact that first we need to break above this technical support and this technical support in order to count on any kind of a pullback higher from the extremely oversold market conditions. Okay, so that's the situation on the gold in the short term. Let me just take a look at the SP 500. Here, what do we have? On the 4-hour chart is of course the movement to the upside. Nevertheless, the swing highs from the 1st of the May, so this monthly high located at 4,190 points still has not been challenged. Okay, so we are still trying to break above this level to do the new monthly high. Nevertheless, so far no avail. Moreover, we got another important technical resistance located somewhere around 4,177, and just the recent breakout above this short-term trend line doesn't actually means the market will fly high very, very, very strongly. So there is a breakout, which is nice. It looks like this market might be might make some kind of a, let's say, a triangle pattern somewhere here, something like this. Maybe it is possible. So the triangle would be in that situation a continuation pattern, which is fine. So we got the first wave to the upside, wave A, then we have the wave B as the triangle. Now wave C to the upside is being made as well, targeting swing high from the May 1st. Momentum positive, momentum is strong. There's a good chance to at least test this high or even break higher above this level. And any potential target for the best, there's one more high from the one more level from the for the best from the 2nd of the February, 4,000, let me just take a look, 4,197, I guess, and 95. There you go. That would be the next target, and the other ones would be the highs of the year. So any break of above 4,195 would be a new yearly high for the SP 500 index. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.